In this presentation, we will take a look at payroll reports after having entered payroll that included vision insurance where it was paid by employees before taxes, and compare and contrast those payroll reports to payroll reports before there was vision insurance but dental insurance, similar but which was paid after taxes within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We are on the home page. We currently have the open windows open. In order to open the open windows, you go to the view drop down and select the open windows list. We're going to go over here to reports first and just view those major financial statements just to keep them in mind by going to the company and financial down to the balance sheet standard and changing that date range to the end of the year, 12/31/18. So that's December 31st, 2018. Checking account just going down into the negative because all we have are the paychecks we've been running, the payroll liabilities we haven't paid. So it's all grouped together. All the liabilities are grouped together. We'll get into more detail about that in later presentations. We're going to go to the reports and company and financial and the profit and loss and just view the major statements here, the major items on this statement. So that's going to be 01/01/18 to 12/31/18. So that's going to be just this item on the profit and loss or income statement. QuickBooks grouping together all payroll expenses, including the liability and the gross pay, into that one number. Now let's go ahead and run the reports and see what happens as we run the quarterlies 941 and the W3 as if we were having stopped at this point after having included this last payroll with the vision insurance. So we're going to go up top and we're going to go to employees, and we are going to say that we're going to payroll tax forms, W2, process the payroll tax forms. Now we're in the second quarter now, so we're over here in the payroll tab and the file forms tab. We're clearly in the second quarter. There's no question about it once again, because the pay period ended in May, which is in the second quarter, and we paid it at the beginning of June, which is in the second quarter. So we don't have that kind of issue of, well, the pay period was in the second quarter and we paid it afterwards. It's pretty solidly, we're in the second quarter now. So we're going to go ahead and just run the quarterly payrolls by just double clicking on the 941 form. We're going to say that the date is going to be 06/30/18. So that's going to be the end of the second quarter, and okay. And that will generate our 941s. I'm just going to say next for this item. Check out our numbers on the 941s. So here we have, and we're going to have three pay periods, our last three pay periods. The one was there because the three pay checks were actually done in the second pay period. So we paid January, February, March, which you would think all be in the first quarter, except for the March was paid in April. And then we had April, May, June. But the June, April and May was paid in June, but that's still in the second quarter. So basically, we have March, April, May, which are all basically paid in the third quarter, May, and June. So those are going to be the three pay periods they were paid in May, June, and July on the 1st of May, June, and July. So those are going to be the three paychecks that we have here. Note that these two items are still going to be different, and that's what we would expect. These are both being gross pay, and they're different by what we would be expecting, which is the employee portion of the 401k. But note they're also different. This amount also is not gross pay. It went down by the amount of vision insurance that we put in place. And so that's going to be something a bit different here. Note we had three paychecks, basically the gross pay. Each of those paychecks calculated to 4062.5. Three of them times 3 would be 12,187.50. If we subtract out minus the 12,162.5, we're going to get a $25 difference. And that's because of the the plan that we set up that is going to be subject to the section 125. So notice that this amount went down, and Social Security did go down, as well as Medicare, because of that transaction, because of the vision insurance, not the dental insurance. So that's what we have here. If we were to take a look at this item, it's going to be twice or it's going to include both the employer and employee portion of the 3 paychecks that make up this amount. So we could double check that with just a flat rate here by taking the gross pay for the 3 paychecks, meaning the gross pay minus the employee portion of the 401k and the 25 vision times this amount will then give us our total, and that'll be equal to the employer portion we calculated on our paychecks. So if we sum those up, those are all going to be what is due at the end of the time period. Let's take a look at the W-3 now. So if we close this back out and we were to run the W-3 and the W-2s for the end of the year, I'm going to make this a large. This report here, W-3s and W-2, we'll just double click on that item. We're going to say for 2018 and OK. We're going to say OK. And this will run. We're going to say edit or review edit. That's the one we want. And say next and next and next. And once again, we have our information, this being for the entire year. So now we have the full year worth of information. And so we had, 5 payrolls now that we should have had. So 4062.5, which is the gross pay, times 5 would be 20,312. This is at 20,287.50, right? So if we subtract this out from 20,287.50, we get that $25. So none of these amounts now represent gross pay at all on the W-2 because these are short by what's included in the cafeteria plan. This is short by what's in the cafeteria plan and what is in the 401k plan. We can see the difference between these two items here. That's going to be the 401k plan, 20,287.5 minus the 19,475.5 is the 182. That's going to be what is on the employee portion of the 401k plan. So they're showing us they're reconciling those items, but we don't have really the reconciliation of what actually got paid because 25 got more was paid that that the employee put into the vision plan. So that's not included in here, although it was part of compensation. And we had the matching portion of the 401k that was paid over and above the gross pay. So just realize that when we look at these W-2s, to calculate and think about what our actual earnings are, they're not as accurate as we might think. So those are the differences we have here. We still have the retirement plan, and we have the SDI for the state and the state information and withholdings down here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.